Hi everyone, welcome back to Stefan Livera podcast, brought to you by Bold. For American listeners, you can buy Bitcoin over at getbold.io. Now, joining me on the show today is Mason Jappa. He is the CEO and founder of Blockware Solutions. So, for people who don't know, they basically do hosted mining, they sell mining rigs, and they also have a US-based mining pool. And I believe you guys also do have some research reports as well. So, we're going to talk a little bit about all of that. So, first off, welcome to the show, Mason.
Hey, Stefan, thanks for having me on. Really been excited about getting on this podcast. I think we were last on, several years ago, and it's always fun to talk to you.
Yeah. And so, yeah, I think there's some interesting stuff happening. Obviously, there's been a lot of developments in the world of Bitcoin mining. Here we are, 2025. I guess it's been kind of crazy how much the mining space has really evolved and grown in that time period. So yeah, maybe you just want to give us just a bit of an overview. Here we are. It's March 2025. Give us a bit of an overview. What is the Bitcoin mining world looking like, and especially the US Bitcoin mining world?
Yeah, totally. So actually, yesterday, the SEC released some extremely favorable
Yeah.
mining coverage. So that was awesome to see. Basically, they're not going after pools. They're not going after miners. They're encouraging it. They're not going after self miners. They're not going after retail miners. They gave complete political clarity over Bitcoin mining in general. So there was a lot of, there's a whole cloud over Bitcoin mining, especially during the Biden administration, where we thought we'd have, additional energy taxes put on us. We thought that we'd have to file all these additional paperworks and have additional regulatory concerns. All of that was just put to bed yesterday. Very secretly, it got very little coverage. So from a regulatory standpoint, I'm feeling great. And I feel like for some reason that, SEC announcement was not covered. As far as the general Bitcoin mining ecosystem, I would say that mining remains strong. So overall, we saw it last year. It was a really marquee year. Bitcoin grew from 30, 40K to 100K in December. The difficulty of the network grow, and the difficulty of the network continues to grow. In the first quarter, we kind of saw a taper back in Bitcoin pricing, but the network continued to grow. So what we actually created was a little bit of a hash price bear market. And our hash price is below 5 cents. That's back
Yeah.
to 2022 levels. So that does raise some concern
Yeah,
there.
so just for listeners, hash price is dollars per terahash per day, yeah? And this is like a measure of how much fiat you're earning based on kind of how many miners you're plugging in, kind of loosely, right?
Correct, exactly. Yeah, people usually measure on terahash or pentahash, so you could say it's less than $50 per day per pentahash, or less than 5 cents per day per terahash. So yeah, I mean it's basically just the revenue of mining in general. So if you're looking at that, it is a little lower, right? But mining itself is such a living organism, right? And it usually course corrects. When you see hash price dip, you usually see eventually the network dip, because what happens is inefficient miners will unplug from the network. Now we have a constant stream of large public companies with planned deployments, with unlimited access to capital. It's not that they're necessarily profitable. So that's why I think we're just seeing a miss connection right now between mining economics and network hash rate growth.
Yeah, right. And as you said, I mean, it's been growing. Last I checked on my locally running mempool space, I think my dashboard was showing about 750 exahash or 740 exahash, something in that range. And so there's been a bit of talk about that and saying, is this going to be the year of the zettahash, the 1000 exahash?
I think it will be. I remain bullish, and I know we're going to talk a little bit about our research. We have a full in-house research prop firm. Part of the reason when I launched Blockware that I launched a research firm was my goal was to actually bring mining to North America. And when I started Blockware, 99% of mining was in China. I was
Yeah,
like, well, if I'm
and
going to
just
do that,
refresh me. When did you start?
I started Blockware in 2017. I started mining in 2015, and I got into Bitcoin in 2012. So I feel
Nice.
like I've
Yeah.
been like most of my living life, where I'm out working or thinking, I've been in Bitcoin. I'm about 33, so I stumbled on it when I was 18 and just dedicated the rest of my life to mostly Bitcoin mining, but also Bitcoin.
Yeah, interesting. And as you mentioned, right, if you started Blockware in 2017, it was a very different world then, right? Like most of the mining was done in China at that point, and then I think was it 2021, the big sort of China mining ban, or so much of that hash rate shifted into North America, and at that time Kazakhstan as well. And obviously now, I mean, we've seen the rise of the big public miners as well. That's been a thing. So yeah, I think there's a lot of different kind of aspects to sort of to sort of understand there. But yeah, I think also want to touch on, you mentioned the SEC thing as well. So from my understanding, there was maybe a bit of a cloud there of whether that mining and mining pools would be sort of dragged into the net as quote unquote brokers, and now they've come out and said no, you're not, you're clear. And I think part of this, I mean, maybe it seems, Trump and the pro crypto, administration, say what you will about all the shit coins and scams and meme coins, but at least it's going to be permissive for Bitcoiners. And from that perspective, those of us who are, focused on growing Bitcoin, we should be happy about that. And it's good for Bitcoin builders, Bitcoin miners, right?
Yeah, exactly. I mean, in short, miners are not a security. We don't have to register our transactions. We don't have to register our participation. It is great news. And honestly, I was, we're also a very large broker, and I was like, wow, if I have to memorialize, I mean, we've sold, 450,000 servers since 2017. Like, we have mining operations across 15 different data centers. It would just be such a nightmare, just from our standpoint, but for everybody in the industry. And if anything, like it held some people back for a period of time on wanting to scale, and it certainly caused a big Bitcoin sell-off, like all the uncertainty in the markets from 2020 through 2024.
Interesting. Yeah. And I guess one parallel, the way I'm thinking about it is like, I mean, if you sell mining machines to people, it's like, it would be like if you expected, I don't know, Toshiba or Lenovo to kind of track every person they sell a laptop to. It's just kind of, it would be kind of insane, right? Or even if you, on the hosted mining side, obviously you will host, mining machines for people. It would be like, I don't know, if Amazon, AWS, or Google Cloud had to KYC and, check everything that was happening on their hosted servers. It would be ridiculous, right? But I think that was kind of the Biden administration being very anti-crypto, and obviously that turned out very badly for them. I think they angered or pissed off a lot of, Bitcoin people who had money and they were willing to put money in, and they supported, Trump and the Republicans. So it's kind of interesting to see that. I'm curious if you think, okay, so this next, what do you see for the next, let's say, 3 or 4 years of Trump's administration? Do you see that being, just more of the same pro crypto?
Yeah, and just touching on that, I totally agree. I mean, Amazon and large entities get away with murder, right? They manipulate taxes. They weren't paying sales tax for such a long period of time, and all of the mega billionaires, they never, they don't have to pay much taxes because they just permanently loan against their equities. There's just all these manipulations in the systems, and then they go aggressively after cryptocurrency companies and put on regulations that they don't use to regulate, some of the largest United States companies. So it's just, we all just felt attacked. So looking at the future, yeah, I'm very bullish this cycle. Man, we put out a research report, and we do every year. We put out forecasting. So our 2024 forecast was pretty spot on. We always do a bear, a base, and a bull case. Last year our
Yeah.
base was 100K. So usually like our base is what we think will happen, and then we put out a bear and a bull. And most of the major analysts do the same. Like you put up three scenarios, and we always like to say, if our base is right, that means that we're generally right on our predictions. This year our base case is 225K. Some of the things that could play into that for this year specifically, and then we can talk about this 4-year cycle. If Trump moves into some more positive energy specific regulation, that would be very good. There are states that offer energy incentives for Bitcoin miners. One of those being Kentucky, and that's where Blockware has a big uh, presence. They subsidize our bills, they give us discounts, they give us economic development riders, and they give us tax benefits to grow. So I think if Trump takes a national policy to encourage Bitcoin mining, and sometime in this cycle, we could see the United States start mining Bitcoin, and who knows, they may already be. And if they push out positive policy as well, you'll start to see more energy providers get involved. But I do think a lot more public energy entities in the United States are mining Bitcoin than you think, and I know of a few, and I can't disclose that. I'm looking at the SBR. You know, we all talk about it. Some people are like, this is a joke. They don't like it. In the end, you know, I think what the United States is trying to do is put rules around Bitcoin and rules around Bitcoin mining, and that does piss off a lot of Bitcoiners, right? Because we're freedom technology. But in the end, you know, you look at it this way: like you have the largest institutions in the world um, that are bringing in Bitcoin and buying in the form of ETFs. And they're just trying to get regulatory clarity out there and set a good path for Bitcoin forward. I hope that there's nothing crazy put out there, but mostly I think we're going to see positive policy. I'd love to see the United States add Bitcoin to their balance sheet outside of the Bitcoin they've already seized, and having a policy that if there is any more cryptocurrency acquired in some way, shape, or form, it'll be kept. I really hope it's Bitcoin only. You know, we don't need all of the other shitcoins out there on the United States balance sheet. The other thing I've seen in prior cycles, you know, we run a lot of research, is Bitcoin price generally outpaces difficulty growth. The historic growth rate is Bitcoin price growing at 5.14%, Bitcoin difficulty growing at 3.56%. So that means on a running basis, historically, you can capture a 1.5% profit spread
So when
by
you say
mining Bitcoin.
5% and 3.5, is that what is that based on?
That's just based on historic measurements from a
But I
time and
mean, you
place.
mean like per year, per month, or what are you saying?
Per month, per month.
Okay,
It's
gotcha.
monthly
Yeah.
growth. Yeah, Bitcoin price growing historically at 5%, network difficulty growing at 3.6. And one thing, like, and we talk about this a lot. If I'm looking at the 4-year cycle, you simply cannot. Let's say Bitcoin rips. We hit 250K. We hit 500K. We hit a million a token. You can't deploy that much energy infrastructure to have difficulty keep up. So there creates this really bullish case for miners specifically, where we simply can't keep up if Bitcoin price takes off. We can catch up over time. And that's why you know, if you look at historical graphs of Bitcoin network difficulty and Bitcoin price, if you see those type of breakouts, difficulty will slowly be able to catch up over time. So that creates some really good windows if you're in the game as a miner, where you can capture some really solid spreads. And we've seen that, right? We saw, you mentioned the 2021 China ban. Well, that's where we saw some awesome spreads, right? You saw network difficulty capitulate, Bitcoin price raise. It was the perfect storm. Miners were rejoicing.
I see. Yeah, and I guess the simple way I'm thinking about it is, you know, every 4 years, obviously we have the halving that, and because right now, at least right now, transaction fees are relatively low as a percentage of block reward. And so most of it is coming from subsidy. And because that's getting halved every 4 years, it's sort of like the bottom 50% of the miners almost get culled every 4 years. Kind of loosely, obviously, it's a bit imprecise there. And then I see it like if you're, you know, if you're already running and you're efficient, and you're, especially if you're in that, let's say, top 10% of miners, that's when you're really killing it, especially at that kind of, let's say, that favorable part of the cycle where the price is pumping harder than people can plug in new miners, right? That's kind of the sweet spot, let's say. But then I guess, I mean, none of us knows, you know, the future. It has historically followed this kind of 3 green, 1 red sort of pattern, right? We don't know if that's going to keep happening. Maybe it does, maybe it doesn't. There's been a bit of talk about like, okay, maybe this is the time that stops. Who knows? I'm curious. What do you see? Are you just trying to project based on things like, I don't know, power law, or just kind of other means of modeling things out from a mining perspective? How do you look at that?
Yeah, and so we don't adapt, you know, power law. We don't adapt all these, you know, fancy modeling. We have our own internal systems we plug in events. We use a ton of data and analytics. We've spent the last, we've been around for 8 years. We have 7 years worth of data, and we use that to project out our pricing. We layer on micro and macro events and their probabilities. So we have just our own internal model that we built. Everyone has their own different playbooks, right? And then we are a mining specific company. So then we from there kind of project out what we think can happen in the mining space. And mining has cycles. Everyone's always like, is there cycles in Bitcoin? Should there be cycles? The cycles are dead. We talked a lot about super cycles. There is always a cycle in Bitcoin mining. It is a 4-year cycle. Now, there's many micro cycles in those 4 years, and those are tied around macro and micro events. We're in a
I
new
see.
micro cycle, the transition of presidency. There's political uncertainty, right? And now we're starting to get some regulatory clarity, and then we're going to enter a new mini cycle, hopefully a bull run. Bitcoin always
Yeah.
runs in, Q3, Q4. There's like there's like 4 cycles a year, right? They're always tied around some event that takes place. Um, I'd love to see, and we always would love to see this, but I do think Bitcoin is kind of really tied to global markets right now. You know, I'd love to see decoupling against equities and the S&P and the markets, but it's not the case right now. When we see sell-offs in Nasdaq and the S&P, we also see sell-offs of Bitcoin, and there still is a ton of Bitcoin price manipulations. You have massive, massive longs and shorts that take place, and some of the largest trading desks in the world, not just in the Bitcoin markets, but the largest trading desks in the world are secretly trading and market making Bitcoin.
Interesting. And so, in terms of you're touching on mining cycles there as well. And are you speaking there, like not just from the halving, the block subsidy halving, but are you talking about other aspects like, I don't know, mining technology, new mining rigs coming out, or the energy game changing, or maybe some country being very pro, like now the USA being very pro crypto. Arguably, it's going to be very pro mine, as you mentioned, that SEC ruling about the broker thing, and it's going to be in that sense. So, is that what you mean when you're talking about mining cycles, or what do you mean there?
Yeah, no, you're exactly right. I think there's different type of mining cycles, right? One is tied to the technology itself. So in the 2016 to 2020 cycle, we saw the largest innovation in mining hardware because mining was really profitable, and all of our technologists and manufacturers were like, wait, we're actually behind the curve on chip deployment. The chips already existed. So we went from like 128 nano, like all the way down to 17 nano in just 4 years. That's like a huge change. And then from 2020 through 2024, we went from 17 nano to 7 nano. And then this cycle will go from 7 nano probably to 1 to 3 max. And then the next cycle, you can only go so far. So I think the huge technology changes on machines won't happen as frequent, and it'll be more so of a level playing field. Um, so that's the technology cycle, and I think that's good. When you kind of have some certainty on what technology exists, it allows you to speculate better, and your models are better, and you can have more conviction when you're deploying into mining itself. Then the other things you said, of course, there's different policy, right? The policy that came out yesterday kind of put to bed all of our policy concerns of the last cycle. So that creates like a new policy cycle where I don't have to worry about mining being a security. That is huge. I
Yeah,
mean
and
that
yeah.
so
Yeah, and I think at one point, I think the Biden administration was going to do, was it like 20 or 30% tax on mining? It was something crazy.
insane.
Yeah.
Yeah. And
So,
it's
yeah.
also state by state too. Like, I mean, different states have different regulations and they can pass different policy. Texas, Kentucky, Georgia, Oklahoma, Wyoming. Those are generally, positive Bitcoin and Bitcoin mining states. And some states are adding Bitcoin treasury to, or passing policy on the want to add Bitcoin treasury. So you as a miner also, you can, choose your destiny. Why not go to a state where there's already positive policy and the energy is cheap? If I found cheap energy in a state that didn't have clear policy, I probably wouldn't deploy there. I can't. You're deploying billions and billions of dollars in infrastructure and hardware and presence. Um, so you have to be extremely careful with where you go. That's why Blockware, we're only in the United States. I haven't ventured off in my history. I've had lots of opportunity. People are like, hey, we have free power in South America, or we have 2 cent power in Norway, or we have 1 cent power in Moscow, Russia. I was always like, you know what? Like I'm the snail. I want to stay in the game, and I want to be in a place where I feel comfortable and I'm not taking risk, especially with, we're client focused, right? We don't really self mine. We are fully focused on making mining easy for everyone else, and we manage, a huge hosted client portfolio.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices, such as the Cold Card Mark IV and the new Cold Card Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases. You can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. This episode brought to you by Galloy. They are building banking software for the Bitcoin age. So if you are with a bank, a fintech, or a startup looking to offer some kind of Bitcoin product, whether that is a Bitcoin collateralized loan, deposit accounts, or payments, Galloy can help you. Their latest product is called Lana. It is a loans management platform, and you can use this to come to market quickly and offer a loans or Bitcoin collateralized lending product for your customers. Now, Galloy have a lot of experience in the space. They started with Blink Wallet in 2020, and they've since grown this to become a community favorite over time. And so they have a lot of experience making things work in a secure, reliable, and scalable way. So if you need assistance coming to market quickly with a Bitcoin banking product, such as lending or deposits or payments, talk to the team at Galloy. You can email them. The email is biz@galloy.io, or go to the website galloy.io. And now, back to the show. Yeah, and so then I guess one interesting question, and I'm sure listeners will have this question, is there's always going to be that question of, should I just buy Bitcoin and just hodl, or should I try to engage in mining? Because for a lot of people, if you don't know what you're doing, and I'm sure you've probably seen this in your years in the space, and I've definitely seen people sort of get enamored or first learn about Bitcoin. They think they need to do mining, and they do it unprofitably, right? As I'm sure you've seen probably thousands of times by now. And then they look back and think, well, hang on, if I just bought Bitcoin and hodled, I would have been better off. So how do you answer that? Is it just a matter of having the right expertise, having, some kind of edge? Like, should you only do it if you have an edge?
I think everyone should do it. And my plays are different. And let me explain why. We came out with like this new slogan. It's like, let's say you were deploying 85,000. You could buy one Bitcoin. And maybe that's roughly the price right now. So our slogan's like, you can have one Bitcoin today or 2 Bitcoin tomorrow. And what I mean by that is, it's all, first off, let me go through before I give you this answer. You need to partner with the right counterparties. Yeah. We've been in the game for 8 years. There's many, many, many hosting companies that have come and failed. Go with somebody that has the tech, they have the operations, they have the expertise. Be extremely careful with your partners, because you need uptime, you need good, decent energy costs, and you need someone that you can trust. So if you don't have those three things, then just buy the Bitcoin and sleep all night. But if you do have those things, then mining is actually works and makes a lot of sense, especially in this particular cycle. So if you deployed one Bitcoin worth and bought new mining rigs from Blockware, and we always point our clients in the right direction. We don't always chase the best, the latest and greatest, because many times that's mispriced. We know pricing really well. We've lived in the trading markets. We're one of the largest secondary traders and machines in the world. So we go to deals that are good and it gives our clients, the highest IRR. Um, as a miner, your returns are Bitcoin denominated, which is beautiful. So most of our client base, when they deploy with us now are at a 30 to 60% IRR, right? It depends on the deal, depends on the machine. There's different reasons. The 30% could be good, because it's a newer machine. The 60% could be older, so you have, different break-even windows. But basically, if you deployed that 85,000 now into mining and you mined over the rest of the cycle, roughly, 2.5 more years, you end up with 2 Bitcoin instead of one. Now, there's another thing to play into this as well. This was something that I think, we helped solve. You need to have liquidity on your mining assets. I really think there's a sweet spot where you need to upgrade and change machines every 2 years unless you're in a ripping bull market. So we created a marketplace, it's basically an exchange. It allows you to trade your hosted miner instantly to somebody else. It's decentralized. So sellers set price, buyers can come in and buy. We invented that technology. We started building it in 2021. We went live in late 2023. We have over 20,000 users now, right? So it's a full trading desk. We process over 1 million trades, $1 million worth of trades per month, and it's growing. It's just kind of been linear. So you also need to have liquidity, and that's something interesting you have with us. So you could mine for 6 months, catch a bull market. Machines also change in price too, right? The perfect situation we saw happen, last cycle. The S19 Pro release, it was $1,700 in June 2020. In November 2021, that machine was $15,000. So what if you could have sold it at that price? You take your exit, you end up with more Bitcoin. Why you mine is you're arbing energy and you want to end up with more Bitcoin. And if you don't end up with more Bitcoin, then you probably bought machines that are too expensive, or you partnered with the wrong counterparty and you didn't have proper uptime, you didn't have liquidity, or something else went wrong.
Interesting. Okay, so I mean, there's a few things like you've got to factor in things like, risk of the factory, or sorry, not the factory, but the data center that you have your mining machine, getting rugged on you or this kind of thing. And of course, I guess as you said, it matters when you come in, right? Because if you bought those miners at the $15,000 price, you got kind of rinsed on it, right? I guess, I mean, we can talk about a few of those things, but I'm curious then, when you talk about the liquidity aspect, as you mentioned, the kind of the 2-year roughly changeover of old mining machine to a new mining machine that's a bit more efficient and so on. Who's the buyer of those machines? Is it maybe just somebody who has access to really cheap power? Like, aren't you just, like, doesn't that rely on there being some other bag holder who's going to, like, maybe they're not a bag holder, maybe that for them it makes sense because they've got extremely low power cost. Can you elaborate a bit there?
Our marketplace actually, like, the machines don't move, right? And so when you're trading in and out, yes, someone else is taking on the risk, but it's centralized, right? No one has a gun held to their head saying they have to buy this deal. There's just buyers and sellers. It's like, and the trade's just processed, and it's built on Bitcoin, and it's all memorialized on chain. And you're paid instantly. You could be mining Bitcoin with us in just 3 clicks. You could buy and mine for a week and sell, a week later if you want. There's always a buyer and a seller. There's speculators, right? People buy during distress markets, they sell during bull markets, they buy during bull markets, they sell during distress markets. There's human psychology involved, right? So there is somebody on the other side. And sometimes, the sellers in distress markets are being bought by well-capitalized institutions and vice versa, right? So we're just creating a free market. And the more user base that we have, the more liquidity that exists in the marketplace. There's always somebody on the other side of the trade. Now, what we do allow too is you can swap out your machine. So you have to take the slot. So, like, if you want to upgrade, we'll help you upgrade and we can take the machine offline and sell it OTC. We do a lot of, OTC transactions where it ships from our data center somewhere else. But to your point, there is somebody on the other side of the trade, and it's all about speculation.
Yeah, I see. So I guess in that sense, it's not kind of an everyone wins scenario. It's that it's more like when you kind of got in and out really depend, like that will really drive whether you make a good profit on this or whether you make a loss on that. And sadly, for a lot of people, when they're new to Bitcoin, oftentimes the time that they come in is they're buying close to the top, right? Whether they're buying Bitcoin or whether they're buying mining rigs close to the top. And then, so I guess that's one thing. Like, don't be a noob getting wrecked buying at the wrong time. You have to sort of, so there is an element of like, I don't want to say timing the cycle, but yeah, I guess you are effectively timing the cycle, right?
Yeah, exactly. And we try to be extremely transparent. We have a in our marketplace, it's like software, and we have an app coming out soon. We have a whole Blockware Learn Center. There's 15 hours of material with videos that teaches you everything. On the miner itself, you can see how long it's run. It gives you a lens into the data center. You can see its 3-month trailing performance, the miner's performance, which gives you a lens into the uptime of the facility. We show you which facility is at. We're partnered. We have 12 different hosting centers. 2 of them we own and operate. The other are all world-class companies. There's 3 public companies and then 7 very well put together and funded private companies. We spend a ton of time in diligence. You hear of all these rugs and X, Y, and Z. Like it happened, one time to us, early on in a cycle. Our one of our large, early, like 2020 Kentucky deployments, they sold the site to somebody else and we had to move. And we were like, holy smoke. So everything we set up, we've been through it all. And so all of our contracts and all of our partnerships are very well selected and everything is set up in, a way that we're ultimately trying to protect our clients. Now, there's a Bitcoin break even price. It's displayed on the machine when you buy it. Our average client's break even price is Bitcoin price between 40 and 55,000, right? So let's say it's 47,500. All of them do pretty well, and a lot of our clients have like the newest generation machines. They have good enough energy costs, so they're quite profitable. And I know we can deep dive into this more, but we do a lot of analysis on public mining companies. We cove through all their filings. We check out all their future deployments. It gives us a lens into projecting difficulty, which gives us a lens into projecting Bitcoin price. Most of the public mining companies actually lose money. Their break-even costs are Bitcoin 100 to 150,000. You know, Mara lost 600 million last year, and I think 500 million the year before. There's very few actual profitable Bitcoin miners. And that's why, unfortunately, you see a lot of their stocks, and they're also diluting, right? They're taking on tons of debt. Their admin expenses are off the charts. When Core Scientific went bankrupt, 80% of their revenue was at G&A admin. That is like you will. I've never seen it like at a public company. If you see 80% of any company's revenue is admin, you're just like, stay away from that. You'll run away. They restructured. They're doing great now. They got new leadership. Ideally, you want your admin to be like, less than 10% or 5%, right? So but I'm just saying, like, look at the numbers. All these
Yeah.
companies are actually, and they always advertise that they're like, oh yeah, we have 2 cent power, we have 3 cent power, we have 4 cent power. Well, they have cost of capital, they have massive operation expenses, right? They have depreciation of machines, they have executive compensations. All the Bitcoin mining CEOs are making like 30 to 50 million a year, right?
I have
Crazy.
no idea it was that high, but yeah, I mean, with I guess large public companies and stock options and things like this, but that is one area that, yeah, there is kind of that question of, are equity investors in some of these companies not really getting a good deal? Are they kind of the ones who are? I think especially. I mean, as I recall, in the 2021 cycle, like that was when public miners were going crazy, right? Because there was very much seen like a levered play on Bitcoin. And then, as you said, like I think Core Scientific was probably the most out there, and I think they really overpaid for a lot of rigs, and as you said, had very high SG&A cost. Then they had to restructure, and I guess now there's a lot of excitement going to the Bitcoin treasury companies. So I guess that's where a lot of the equity investors are sort of migrating. But there are still, Riot and Mara and people like that who are doing, this kind of issuing, debt or these kinds of strategies to get more Bitcoin as well, right? So I'm curious what your take is on that. Like, does that help them or hurt them, or is it kind of a red herring and equity investors are still not getting a good deal there, or what do you see?
I mean, I thought it's kind of funny when you see a public miner take on a ton of debt to buy Bitcoin. You saw, and it's actually there's a huge divide between the public miners. Half of them are like, yeah, we want to do that, and the other half are like, well, we're Bitcoin miners. If we take on debt, we should buy more miners and mine more Bitcoin, at our advantages, right? So there isn't, it's kind of shocking when you see it. You're like, it doesn't make sense to me, right? That they're taking on debt for Bitcoin treasury, but they have an advantage because they have access to cheap debt. So that's ultimately their play. I do think Bitcoin miners will be a proxy to Bitcoin, but that's during a bull market in the situations I described where you create there's gaps between
Right.
difficulty and
In that
Bitcoin price,
favorable part of the cycle, right?
and it'll
And
happen, man. It will.
yeah. So I
These
mean,
guys will.
but then the thing is that let's quote. I mean, you probably understand that better than I do. I mean, I'm sure you do, but that favorable part of the cycle might only be a short few months. It might be 3 months. It could be 6 months that you're getting that really crazy outperformance in terms of price versus how much new hash rate can get plugged in, right?
Correct. Like you're talking the short windows, right? It all depends. If Bitcoin, it's at 400,000 this cycle, you might have several short windows. We all know like when Bitcoin moves, like some of its biggest movement of the year happens over like a 1 to 2 day period, right? Like Bitcoin really moves a lot, like 10 to 15 days total in the entire year. It's all about catching those kind of arbs like and Bitcoin miners have been smashed recently, and I'm not saying, and a lot of these are my clients. I'm not necessarily trying to destroy them, but I think they should really focus on cutting their expenses, focus on mining, focus on their energy portfolios, which have a ton of value. You see a lot of them moving into HPC as well, because they can make a lot of money there, but it's way more expensive to deploy 1 megawatt and to build a tiered data center and have H100s set up or H200s in there, NVIDIA. It's $50 million per megawatt. For Bitcoin mining, it's about 2 million per megawatt. So it takes 25x more capital. But they're
Wow.
making, their profit. So they can make, if they're doing cloud, right? And they're selling or they're contracting directly with consumers, not through like a marketplace like CoreWeave, they can make 35 cents per kilowatt hour in profit, right? On mining, they could be at like 10 to 15 cents. So they're spending 25 more X capital to make 2 to 3x more dollars. But while they're all doing it, I mean, look at the world right now. Everyone's all in on HPC and AI, and it's good for their stock story. And maybe they can get a stock pump, like if they transition into that place. Overall, I do think it's interesting, and I do see a lot of growth in HPC and AI. I do think it's overweight right now. CoreWeave also just like shaved 20 billion off their they were at 47 billion and they wanted to IPO at 35 billion. And they're like, wait, never mind, we're doing 25 billion. I mean, that's just such a substantial swing in such a short period of time. So there is some, shakiness in those markets.
The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold vault. The Bold Vault is a 2 or 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Cold Card hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. Yeah, interesting. Really interesting comments there. And I guess we see a lot of discussion about, like things like what the break-even price or what's the energy cost of that company. But then, I mean, you have to think it's a holistic picture that you need to think about, because you also have to think about, well, what was the cost for them to get those mining rigs? Did they overpay for the mining rigs, or did they get a good deal on those mining rigs? And how operationally efficient are they and good at keeping high uptime and all of these aspects of it also.
And something I like to tell my clients, which is true, and most of the public clients, nearly all of them are my client, they don't trade machines. So like when we see these cases where machines are covered, right now is a great time to deploy. I think machines are cheap. They're really cheap. In fact, like there's still massive Chinese resellers. They're coming to companies like us. They're selling for less than they paid. They're way over leveraged. So you can get really good deals on machines. And when machines are cheap, that means you're going to have, your cost basis is lower, so you have less risk on your machine losing value. and your IRRs are good because you get a good deal. Now, the public miners, when they buy, they just deploy. And then they'll hold those machines, they'll run them usually for 4 years, and they'll upgrade 4 years later. Well, there's a whole game that you can play in between where machines go up and down in value. And that's why I thought it was interesting to create a marketplace. So you don't actually have to really compete against the pubcos when machine prices change. You're kind of that's why I think there's a lot of really interesting room there to play this game and arbitrage ASICs, bank your, 2-3% monthly in Bitcoin denominated rewards, or 4%, 5%, depending, on the markets. And then, trade your ASIC around. ASICs easily can double in price when Bitcoin runs.
I
You
see.
can
So,
also depreciate them, right? You can get tax
okay.
advantages.
Okay. So just to give people a rough kind of idea, as we stand today, obviously these numbers will move around, but as of
Yeah.
21st of March, 2025, can you give people like a rough idea? How much does it cost for a reasonably competitive Bitcoin mining machine? And what is, let's say, a competitive electricity rate, that is
Yeah.
reasonably achievable?
Yeah, so I'd say like you can get new gen machines. Let's say like the S21 Plus is one of the best deals in the market right now. Um, those are, let's say, the 225 terahash. They cost $20 per terahash. It's roughly $4,500 for the miner, right?
Yeah.
A good hosted, I don't home mining's fine if you're doing bit axes, you're kind of playing the lotto. But if you've got, 10, 20 cent power, just don't do it. Go get a host. Good hosting rates are 7 to 8 cents with quality providers. And if you plug that machine in, let's say you have a 7.5 cent hosting rate, your Bitcoin break even cost is like Bitcoin, 50,000. So it's great. You've got a nice, 35K buffer right there. You hit, a 30-40% IRR return. And um, and yeah, so and I'll just say, like, here's a comparative machine, right? The S1 Pro, it came out last year. It started selling for $18 a T. It actually went up in value. It was selling for 22 to 25, in Jan, Feb, and now it's like kind of back down to 20, 21. So there was a game you could play, right? Where you you bought it, you pocketed all the mining profits, you sold it for 30% more than you paid. So you can play these little micro games. So that's just an example of a really common sale. I would say, don't necessarily chase like the newest and latest and greatest. Buy the S20 Plus is just came out, but it's just like it's in the mid to upper tier of being new. And look at dollar per T and efficiency. Those are the two most important metrics. So you find like a nice marriage of those where it's cheap from dollar per T and has good efficiency, go for that deal.
I see. Yeah. So, yeah, I mean, for me, I just see it like I don't have an edge in this. But I'm sure, if you are the kind of person who has an edge in sort of understanding these nuances of like, okay, this is a good deal. Now's a good time. Whereas, now's a good time to sell. Like, let's say, okay, hypothetical. Let's say Bitcoin later this year hits like 200K or whatever. And maybe at that point, you've got a pretty big profit margin, assuming you have, as you said, you bought that machine for 4,500, and your hosting rate is 7.5 cents. Now at this point you've got a pretty good profit margin, and maybe at that point would be the time to sell the machine, right? I guess that would be hypothetically what you might do if you were trying to time the cycles, which I don't, but I'm curious to hear how you see that, or how you would think through that.
Yeah, totally. I mean, listen, like you could just play the game where like, hey, I buy a new machine, and usually these machines will last, and they're getting better and better. Like if you're doing like hydro machines, those things will last 6, 8 years if the market allows you, right? If they're profitable. Air cooled, 4 years is a good window, right? So buy new gen at the beginning of the cycle, mine it to the end. Looking at last cycle, 2020 through 2024, a lot happened. But let's say you bought that S19 Pro I talked about earlier, $1,700. You just plugged it in and mined it for 4 years. It remained profitable the whole time, by the way, at the 7.5 cent window. You actually would hit a 600% return on the amount of Bitcoin that you mined and the amount you paid. And then at the end, the S19 Pro in 2024, it was worth about $1,000. So you could have you saw at the end, and that makes your return, add another 50% to your return. So you hit like a 650%. That's why you mine Bitcoin. What happened during that cycle? What was the price in 2020 around the halving? Was it 50K? Remember that was like, or to 20K, something like that, and then it ended at
Yeah, I can't remember now. Yeah,
yeah,
something
and
like,
then it
yeah.
ended at like let's say, um what was it at in March 2024, we were at like
We're probably like
70K.
50, maybe, yeah,
Yeah,
60.
60.
Maybe
Yeah, so
we hit
like
like 73, then we were kind of 50, 60-ish range, something
yeah,
like
so would
that.
you hit like a 3x there? Let's say you hit a 3x. So mine actually won. You doubled your returns. I think you can do the same. Like this cycle, it can be the same story. Mining is a way to dollar cost average into Bitcoin, which is great. Everyone recommends DCA. If you're just buying Bitcoin, just dollar cost average it. Not everyone's a specialist and they can't time markets perfectly. I'm not a trader. I lost too much money trading in the prior cycles on leverage. I'll never do it again, right? Um, so you can DCA, you're arbing energy. So you're just minting new Bitcoin, non KYC, by the way. Like when you do hosted, it's your KYCs. You're not KYC. It's non KYC Bitcoin. It makes sense. Now, I will say this: like I like hosted mining a lot, and I run a business in this space, obviously, and I've been doing this for 10 years, running my business for 8 years. For the next 12 years, hosted mining is pretty clear to me. Like we're 93% of Bitcoin's mined roughly. So about 6% of Bitcoin will be released over the next 12 years. We have one last nice jump where there's a lot of subsidy to chase. Transaction fees can kind of move here and there, and there's different things that it can increase or decrease transaction fees. But from the year of like 2140 onwards, we're going to be chasing 1% of Bitcoin supply for, uh, 100 years,
So,
right? I
so
meant
you meant from
2036 to 21.
2035 or so. Yeah,
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 around there.
yeah,
Yeah.
to 2140. That's the number, right? All Bitcoin will be mined in 2040. So that, like, Bitcoin needs to be at a really good level for mining to be continually, interesting, right? Otherwise, it may just become too centralized, right? Where it's just like governmental or energy companies are just mining because there's just really little to no spreads. But hopefully Bitcoin's, seven figures and we're all still in glory days.
Yeah, well, I mean, it kind of depends. Like, if the fiat price doubles every 4 years, and maybe not forever, but just like at least for for the next few decades at least, then that kind of, I guess you could argue that helps over time for it to kind of decentralize out over that time. And then after that, I mean, who knows? Hopefully by then there's lots of transactions, and then there's maybe transaction fees are sort of picking up from subsidy at that point. I mean, who knows? But I guess that's probably the optimistic, the case, wouldn't it be?
Yeah, totally. The other interesting thing you can do, let's say this way, like let's say you had a nice Bitcoin stack. You could go get a loan against your Bitcoin. And there's actually ways, there's certain companies that where you can still maintain the keys of your Bitcoin and get a loan on it. Let's say you get 5 or 10%. And let's say you're mining, then you put that into mining, right? And you just have to pay back your loan. There's a great way where you can actually end up with more Bitcoin, collateralizing your current Bitcoin if you enter that into mining, which vastly will beat out the yield or the interest that you have to pay on the loan itself. So there's all these different creative things that people are doing, and I think mining, one of the holy grails in Bitcoin, and you see all of these companies chasing it, is Bitcoin yield. Like if someone, and a lot of times, if someone says they have Bitcoin yield, they really don't, right? And that's where you're
Right.
majorly
It's like, where's
exposed.
the risk being hidden, right? Because that's,
Yeah.
there's risk somewhere, right? And I think that's probably the point that a lot of people thought, in the BlockFis of the world, that they were getting whatever 6% interest, when really, once you account for risk, maybe they should have been paying like 50% interest, or I don't know, whatever. But the point is, there was kind of an unstated risk question or risk component there that a lot of people were ignoring. And that's why it has been safe. The safe play is, get it on your cold card and hodl it there, and don't worry about yield, and
Yeah.
just hodl. So I think that's an approach that's worked. But as you said, I guess if if you knew what you were doing, and you had, you didn't fall into the pitfalls, then okay, yeah, I concede that if you knew what you were doing, you could probably make more Bitcoin. But it's always a question of what risk are you taking, and so on.
Yeah, and there's a couple other things. Like one interesting one I look at too is WBTC, right? Like
Right.
you're getting a yield there, but 40% of WBTC is controlled by one person, Justin Sun. It's like, where is this? That's just another fun example. But actually, like there's also other benefits to mining. So if you're an individual and you own a company, like a lot of our like I'd say 30% of our clients are business owners. You buy the machines, right? They're classified as machinery. And Trump's actually bringing back 100% accelerated depreciation. At least he said he would, but it was 80% for a while. You could do accelerated depreciation on your servers, take a write-off,
Right.
and
So it's
use
like a
that as a
tax
tax
benefit.
advantage.
Yeah.
It's a tax. So we see Q4 is weirdly, it's always Bitcoin's best performance month. But if I'm looking at Blockware financials, like Q4 is always our best year. And a lot of time is because we have all these business owners and institutions and funds and family offices. And they're buying a bunch of servers, they're doing accelerated depreciation and writing them off and taking that out against their gains. So there's a whole system of tax play as well. And then you can, accrue your Bitcoin long term, accrue long term capital gains. There's a whole tax game that people play here too.
I see. Yeah. Yeah. Interesting. And I guess that of course depends what country you're in, what tax
Yes.
situation what you're in as well. But yeah, certainly if you're in a company. So I guess give me just coming back to some of those examples. What kind of, if you were going to think of it like BTC yield or IRR, like you said, what would a typical IRR have been if somebody just did like a typical thing, like you said, like one of the maybe not top of the line machines, but like a reasonable machine, and let's say 7.5 cents, and they mined for a full 4 years, and they sold the rig at the end of the cycle. Like, do you have a rough number there, or
Yeah, so it's the one Bitcoin now or two Bitcoin tomorrow, right? That's
right?
the exact that's the model, right? So you end up with one more Bitcoin than you have, so it's 100% return. And that's if you just mined, you sat there, things kind of went in a way, a normal type of way. And there's people that think about the world in two ways, right? They think about fiat and pricing Bitcoin in fiat, or they think about Bitcoin and just accumulating more Bitcoin. In both ways, it kind of, answers that, right? Simple. It's like you can have one Bitcoin now or two Bitcoin tomorrow. That's for this cycle. And in the next cycle will be like, you could have one Bitcoin now or X Bitcoin tomorrow, right? And what I
Yeah,
mean is just like mining now through the end of the cycle when subsidy cuts in half. And then you sell off and maybe you get a bonus. But you can also play the game, right? Play it. We invented a system, right? Let's say you get lucky, your machine doubles in value along the way, you accelerate your returns.
I see. Because at that point you could sell the machine, and at that point there might be a noob who's buying in, and they don't understand that it's the top of the cycle. They're not meant to be buying at this time, or maybe they're a speculator for whatever reason. They have some reason for it. But I guess the other question something I'm thinking about more nowadays is just kind of related to power law, but it's like diminishing returns. Like I'm expecting going forward diminishing returns and diminishing volatility. And I think it's statistically, objectively, if you look back over the 15, 16 years of Bitcoin's price history, that's what we've seen. So we should expect that going forward, or at least that makes more sense to assume that the same thing will carry on. And so that may change some of these numbers over time, right? Like it may not be one Bitcoin is two Bitcoin. Maybe it'll be 1.5, or it'll be 1.3 or 1.1. Like over time, I see it sort of tapering down. But what do you see?
I agree. And that goes back to my exact thesis. Like this cycle, I feel pretty comfortable about, and most analysts you talk to are bullish. All the largest analysts are, many of them forecasted a 150 to like 250. That seemed to be like the base case of most people, and that's just for this year. And I'm like, well, it's pretty good. So and machine prices are cheap, so I feel good about it. But to your point, like from the let's say the 2028 to 2032 cycle, it could be one Bitcoin at the beginning of the cycle and you end up with 1.3. But hey, maybe fiat denominated, that zero point 0.3 Bitcoin is worth 400,000 times zero point 0.3. And then if you're looking in fiat terms, you're like, hey, I'm still making the same money I made last cycle. That can kind of be the system, but 100% you're not going to continually, be in a situation where you can end up with two Bitcoin for the price of one, over a 4-year cycle, right? Or right now,
Yeah.
2.5,
And of
3-year
course,
cycle.
there's risk with all these things too, right? It's fair to for people to understand that, because yeah, I mean maybe right now it's Trump and it's pro crypto, but maybe the next time around it's more hostile administration, and all these things could change, and so then that could really change things for the industry. Maybe it becomes more popular in some other country, or I don't know. I think but it's probably fair to say over this next the rest of Trump's term at least, that there's a good amount of time for this industry to grow, and the network effects, the hodlers, the users, the mining, everything, developers, builders, that network is going to grow a lot in that next 3 or 4 years. And so then, even if there were, let's say, a hostile administration, let's say it's Gavin Newsom in in 2028 or whatever, maybe he won't be able to do that much damage because by then the industry has grown. Who knows, right?
Yeah, I mean the goal is to have Bitcoin be bipartisan, obviously. And I do like there are and a lot of strong Bitcoiners like lobby to both parties. Take out politics, like there could be changes of hand, right? And it sucks we live like just in the United States, we live in like a two-party system. And so you don't want like let's say the Democrats run in 2028, then just rip out all of the work that we did and from these last 4 years. So I do, I'd love for Bitcoin to be bipartisan, but there's always risk in politics.
Yeah, I see. So yeah, I guess any other. So yeah, I mean, you've got you said the bear case was 150, the base case is 225, and your bull case is 400. So let's just talk a little bit about some of those different cases, and I guess some of the events that you might be predicting. I guess one thing is the SBR thing sort of came through, right? Because I think on your bear case you had Trump does not follow through on SBR, and now obviously he has. At least the current holdings are being held. And then the question now is more like, how aggressively do they stack, and how aggressively do other nation states and other corporates and big holders, how aggressively do they stack?
Yeah, exactly. Yeah, bear case. So we have an SBR, we checked the box, so hopefully bear doesn't hit, and bear at 150 is great. Um, Rates are important, right? Powell gave us. He's always, he's a master at communicating nothing, right? So
Yep.
it's always interesting. But yeah, if we don't see significant rate cuts, that's certainly a bullish case for Bitcoin, right? When we see rate adjustments in our favor. And then right now, Bitcoin, in our bear case, we talk about this, but Bitcoin, like 60 to 70% of Bitcoin's in long-term holders. That's fantastic. And seeing a diminishing exchange float is fantastic, right? This is a supply and demand economy. So long-term holders saying, holding on to their coin, is great. The base case we talk about SBR again and what they do with that, which you just alluded to. Um, we see a lowered interest rate, which I think we'll get. And then we see um, increase in Bitcoin corporation adoption, which I'm seeing like we saw a ton of those in Q4 and Q3. And I think we'll continue to see that. Everyone's watching the Sailor playbook, and some people like Sailor, some people don't like what he's doing. But there are a ton of companies that are strong companies that don't need to completely lever in debt that can easily turn uh, to a Bitcoin treasury, and it makes so much sense. Not every company needs to go for this extremely levered play. Um, and then in the bull case, it's a factor of all the above, and we see a lot more, company adoption. We see a lot more positive economic policy, which we're already getting. We see a lot more positive Bitcoin specific policy. And if the US ever announces that they're going to actually buy Bitcoin, 400K is easy, right? We're going to be in numbers well beyond that.
Mm. Yeah, we'll have to see. I think 400 is probably for me. I think it's unlikely. It's possible, but it's unlikely. I think the sort of at a guess, yeah, this kind of base case sort of feels more likely to me. But yeah, I mean, none of us knows or can predict that. And I guess other broader things happening in the world of Bitcoin mining. Things like, I guess, new mining rigs. Like one thing I've heard of as an example is like they're going to start coming out with different types. Like I guess historically it's been this kind of shoebox mining, or at least the in the ASIC era it was this shoebox mining, and then maybe now that it's kind of established that you set up a data center, maybe they'll make it more like server racks, things like that, or different kinds for different different setups, like different types of rack space, I guess. I'm curious if you have any thoughts on that. Like, is that going to become a really big thing that they differentiate more?
Yeah, no, totally. Through 2020, it was all air cooled miners. So it's all you have environmental factors. You don't employ in hot and humid areas. You don't employ in next to water where there's salt corrosion. You have to keep, positive airflow, and things can come in, the minor bugs, dust, all that stuff. We're moving in an age where it's like hydro and immersion. I think in the second half of 2020s, it's like hydro and immersion will dominate. There's enclosed hydro where it's intercirculated water, so you don't have an outside filter that can have contaminants in it that ruins your machines. Um, Immersion, right? Immersing the server into dielectric fluid and taking out external factors. You can then push the chips to clock higher, control their temperature, control their efficiency. The reason why we didn't see that as much is A, like text, but B, mostly cost. Like hydro and immersion tech existed, it was just so expensive. I remember like
Right.
first hearing about it, in like 2018, 2019, 2020. People, it was like $1 million to $2 million a megawatt just for the infrastructure. And
Yeah.
then, or you could build out air for 300K per megawatt. So everyone's like, all right, we're doing 300K. Now it's like hydro and immersion are not, a little bit more than air. A really good operation can build out air for 150, 200, 250K. And then hydro and immersion might be like 250, 300, 350K. So, but you get a lot of benefits to hydro and immersion. You get more terahash per slot. You get more efficiency. You get longevity. So that's why I think we're going to see a shift into a lot more of hydro and immersion deployments.
Interesting. So it's like, yeah, the cost has come down for hydro and immersion, and now, so I guess the point, as I'm reading you, it wasn't really worth it in the early years, but now it's kind of becoming more and more worth it to do it, because of the overclocking benefit and the extra hash that you're getting.
Exactly. And it was all a function of cost. And like for hydro example, and also you don't want to be early on. Like hydro they didn't have like enclosed hydro systems back then. So let's say you had like an outside water feed and that water gets contaminated, you know what happens? All your miners are destroyed,
Oh wow.
right?
Okay. Yeah.
Yeah. So that was the early days hydros. You read a lot of horror stories in Texas specifically with the water that's coming in. I mean, you have to not the water that goes in has to be filtered at certain pH levels, has to be deployed at certain temperatures. It's very specific.
I see. Yeah, but I guess as the industry matures, professionalizes, there'll be more and more people who know how to do it, and it's kind of a standardized. I guess it'll become more of a standardized thing, won't it?
Yeah, 100%. And I think it's really come down to the infrastructure players, and there's a lot of third-party manufacturers now of that infrastructure. So deploying immersion, deploying hydro is much easier, much more simple. You're seeing a lot, the access to that technology at a good cost, being much more prevalent.
Hmm. On the front of, I guess, manufacturers, are you seeing now that there'll be, more other manufacturers of mining machines who are competitive, or is it, what are your thoughts on that?
Yeah, and I'd love to see this. Bitmain has monopoly. They probably have 80% of 85% of market share. Then MicroBT maybe is 5 to 10%, and then the remaining 5% spread across, like Canon and a few other small players. So it's just like one company that controls everything. Now we have Block. Companies like Aradigm are entering. You have other U.S. entities. I feel like I hear about a new U.S. entity that's potentially entering the manufacturing space, every day. Um, so it's a really a breath of fresh air to see more manufacturers, and I'd really love to see Bitmain dominance come down, right? They have an absolute monopoly. Um, they're massive miners too. They run a huge pool. It's all the centralization fears that you can think of Bitmain has. And so
Yeah. On the, the pool side of it, do you see any change there in terms of the pool centralization concern that people are having right now?
I hope so. Listen, I think there's efficiencies to FPPS, right? It makes to have consistent projected rewards and having your daily revenue mapped out. I think the days of FPPS, could change, and it's in a lot of the FPS PPS providers. There's more cost than they can support. And you're seeing a lot of interesting pools come out, like Ocean Pool and a new pool called Demand Pool that was just launched by one of my friends, and Stratum V2. Um, companies like Mara have their own pool, right? I think that's all positive too. I think ultimately, like in pools, you should have transparency. You don't really get that in FPPS. You know, there's a balance too, because some people need like guaranteed rewards. So it's a really big debate in the ecosystem. Um,
Yeah.
and most of it for our clients, like, you know, we're pool agnostic, right? We let people kind of run on our pool and we give them good deals. If they really want to go somewhere else, you know, we let them do that.
Yeah, sure, sure. Okay, look, I understand you've got to run. So, look, thanks for joining. Listeners, check out Mason and the team over at blockware Mason, thanks for joining me.
Hey, Stefan, thanks for having me on. It was really a pleasure. Great talk.